Well, stocks a bit muted this morning as investors brace for a big week ahead, including January jobs numbers and the latest policy decision from the Fed. Let's bring in Marvin Lowe, State Street Senior Global Macro Strategist. Marvin, good to talk to you this morning. Taking a look at where Treasury yields are tracking today, we're seeing a bit of a pullback broadly from the longer to the shorter end. As you look ahead to Decision Day Wednesday, how are you positioning your portfolio?
Yeah, I mean, it's really a function of whether or not we're going to get anything significant coming out of the Fed. We have been increasingly in a range-bound environment, if you will, somewhere between 4 and 4.25. As we get closer, it gets kind of narrow in there. I think I'm positioning basically around the fact that we're going to stay in that range, and that commentary that the Fed is going to, be cutting at some point in the next several months remains in place.
And of course, a lot of people wondering when we're going to see that first rate cut. And obviously, depending on the circumstances as to why the Fed would also need to cut as well, despite getting some political pressure, as we saw earlier today from Elizabeth Warren. What is your take on what makes sense in terms of the first rate cut? What sort of circumstances?
Yeah, I mean, so far it does look like the economy is holding in. Certainly, we've got better inflation data that makes the argument that the Fed should be cutting earlier. But at the same time, we've got consumer strength, we've got employment strength. And what we saw in last week's growth numbers, the GDP numbers, it shows that there's that momentum that's carrying itself into the beginning of this year. To me, I'd like to see how all these chips fall so that we can assure ourselves that inflation is in fact moving in the right direction and will remain in that correct sweet spot, if you will. And that's a May, June time period for me, probably leaning a little bit more into the middle of the year than over the next 2 to 3 meetings.
We mentioned the Fed meeting as well as jobs report. We've also got a slew of earnings coming down this week from those mega cap tech names. Given the run up that we have seen in these names, is there a situation where you would see yourself adding exposure depending on what comes down in earnings, just when you think about just how high the valuations are right now?
Yeah, I mean, that's the biggest challenge, certainly. The valuations make it hard to add. Kind of having said that, I do think you wind up in an environment where if you're maybe more tactical in trading and you can ultimately move around and trade around some of the volatility that might come around, I think it still is supportive for overall risk because we're, again, going to be in an environment where we think the next move from the Fed is going to be a cut, and we can ultimately start seeing it within a very short period of time. But you're right, valuations certainly make it hard. The breadth of this rally that we've seen over the last couple of months has focused on those real mega caps, and we're going to get a sense this week as to whether or not it's justified.
Marvin, of course, investors with that one eye on earnings and really begging for some clarity from the Fed as well. But one thing, we talk about that headline inflation number, but what about the balance sheets, things rolling off the balance sheets? Do you think markets are perhaps underestimating and not paying enough attention to that?
Yeah, 100% that they're not paying attention to it. I do think that there's a easy way of looking at the balance sheet, and that's the way the market's taking it. Once the Fed starts to cut, they're going to stop the shrinkage of the balance sheet, QT, if you will. I don't necessarily think that's a given. And I think the market potentially could be surprised that the Fed continues to shrink the balance sheet even as they start cutting rates, because bottom line is the balance sheet's too big. Based on how they generally approach bank reserves, those bank reserves are still much too large within the system. And that might not package as well as what the market expects. So it's a buy the rumor, sell the fact kind of situation that I see, particularly with regard to the balance sheet.
Well, hopefully more investors now keeping that on their radar. Appreciate you taking the time to join us this morning.
You.
Marvin Lowe, State Street Senior Global Macro Strategist. Thanks so much.